Good afternoon, everybody. Ladies and gentlemen, thank you very much, Marine Money, for inviting Veson Nautical today to present the OSV market review and our interpretation of what we believe is happening in the market at the moment. So, basically, the purpose of this OSV market review presentation is for us to use the data that we offer to clients available to us to demonstrate why this current offshore bull run and underlying fundamentals are different to other asset classes that we cover in our platform. We don't just do OSVs at Veson, we do OCVs, we do mobile offshore drilling units, we do renewable ships, and other, of course, cargo asset types and so forth. So if we just take a quick look at the agenda, we have an 8-point agenda. I'm going to tell you a little bit about Veson as a company, then we will look at sort of utilization, some vessel trends, order book, sort of historic values, sale and purchase, and then sort of some future indications, and then we can take some questions at the end of my presentation later on during the intervals. So a little bit about Veson as a company. The goal of our company is to continue to be the standard platform that propels maritime commerce. We have recently acquired a number of companies over time. The most recent one was Vessel's Value, which I was part of before Veson acquired us. We have 5 verticals in total that are built into our Veson ecosystem. We have Q88, so those of you who are not in offshore but are maybe in the tanker business before you were in offshore would have heard of Q88. We've had a recent acquisition of ShipFix. We also own, of course, IMOS, which is our proprietary platform, the original one of Veson, and we have a freight analytics commodity flow platform called Ocean Bolt. So Veson, we are a US-based company, Boston-based company, of course, a software and data solutions firm. Ultimately, what we want to do is we want to provide insights of all the markets. We want to optimize commercial workflows, and of course, we want to ensure that decisions are being made efficiently by users of our information. You can see a little bit about our clients and who we work with. Right, so, I mean, look, if we get to now the offshore part of the presentation, I mean, utilization, I'm not really here to sort of reinvent the wheel. I mean, I think I've attended a lot of offshore conferences, and it's pretty obvious to see that there's a tight supply in the market, particularly in the OSV market. There's, of course, a strong oil price to back this all up. There's a huge demand from NOCs, IOCs, and EPC contractors. And, of course, there's a lack of new building activity. So, I mean, all of the fundamentals, which will pretty much be a theme throughout the rest of my presentation, and probably the rest of other people's presentations as well. So if we look at current offshore utilization at the moment, and it's not going to be in anywhere as much detail as Sam's presentation in Rystad, but a little bit more of a bite-sized overview. We can see high utilization numbers here. So 94% of utilization of vessels working OSVs in Northwest Europe. We've got 85 apiece in South America, East Coast, and Middle East Gulf. We've got Southeast Asia sitting at 82%. And we have 70% and 68% in Gulf of Mexico and West Africa, which may on face value look sort of lower than the rest of the other regions, but still significantly better than they have been in previous years. So if we look at offshore utilization's change from January 23 to March 2024, just to translate this into absolute numbers, you know, we've got around 14 vessels reactivated in Northwest Europe. We've got 11 vessels reactivated in the Middle East. We have 22 vessels reactivated in Southeast Asia, and we have 51 vessels reactivated in the Gulf of Mexico, using our AIS information for offshore. We also can see here from this one-year TC of the 12-month change that there's healthy numbers all round, and we believe that it will continue to do so in the future. So this is now where it gets quite interesting in terms of my presentation, in terms of OSV fleet development. So what we need to really understand, all of us, is we need to understand what is causing this positive sentiment. So To understand this metric, we need to look back at the data historically with a direct comparison to today. Okay? So it's a simple sort of imbalance of supply and demand, as Sam mentioned in his previous presentation. So looking back at this graph over the last 10 years, the light blue shaded area are all the new building additions and deliveries that came into the water during the boom years, which caused significant oversupply and basically crashed the market. So if we sort of focus in on and zoom in on 2016 through to 2022, there's a large amount of scrapping occurring with few to no fleet additions and a flat net fleet change. If we look at the fleet age profile of PSVs and AHTSs, I mean, on average, they're around 80% of the PSV and AHTSs sit around 10 years old. So this data infers to us, and should be to of course, the people who want to interpret the information, that we have a shrinking and aging fleet with no significant new additions coming online, therefore the supply is very low and tight at the moment. So now we need to look into vessel trends. So this lack of supply has caused a firming of valuations in the past 12 months. And we can see both AHTSs and PSVs experiencing annual percentage increases in values of 30 to 40% as an average. Okay, I don't know what's going on there. There we go. Okay. Definitely my favorite slide of this presentation. So we've seen new market participants coming to the table, both traditional Greek ship owners like Mr. Marinakis and private equity companies who are showing renewed interest in the oil and gas markets. Of course, the Chinese resale market has all but depleted and been reabsorbed back into the market. Contrary to what others are telling us, we are seeing an emerging new building market. Recently, Petrobras announced a tender for the chartering of up to 12 PSV new buildings with delivery of 2024 or later. We have increased charter rates due to underlying fundamentals outlined earlier, which is translated, of course, into a seller's market. So it's not unreasonable to put a 15-year-old large PSV into the market and achieve 2 to 3 million over expectations due to an overall tight market. We've touched on this before, the order book. There have been very few to no fleet additions. So the next question that we need to ask ourselves is, how long is this going to last? And to understand that, we need to look towards asset valuations, which is what we at Vessels Value are, of course, famous for in the market. So if we look currently, sort of new building versus resale value of a PSV large, 5,200 deadweight Chinese in China, we're seeing the current new building price sitting at around 37.96 million US dollars, with some suggesting, that it may be actually lower than this. The current value of a resale on Vessels Value offshore database is sitting currently at around 33.2. Okay, so therefore, the percentage difference between a new building and a resale is certainly closing in. And to put this into perspective, my colleague did a similar presentation to this earlier in the year, and the gap at that time between these two figures was about 18%. Today, the gap is around 12%. So this will definitely give you an indication to see how fast this market is moving and how fast that gap is actually closing. It is not unreasonable to say that we will see Chinese new building deals concluded soon. We have the same for Norway as well. Another question people are asking is, how much further does this cycle have to run to reach the heights of 2008? Okay, so this graph here shows a PSV large, where we show the historical fixed age value of the vessel based on its current age. In this case, we can see it's 5 years old. We can see here that the current value of the large PSV is sitting at 38.52 million US dollar. I want a lot of the investors in the room to quickly take a look at that spike and look at the endpoint of how much it has gone up. And this is an excellent indicator of positive sentiment and positivity in the market, and should get a lot of investors excited about where the offshore market is currently sitting at the moment. If we look here, we can see the current, as we know, the current value is 38.52. We can see here the long-term historical median sits at around 28.94. Okay, so, you know, whilst everybody is saying that there's a lot of positivity in the current market, actually in reality, if you look at the long-term high of 63.93, and based on our empirical data, you know, we as sort of valuation analysts would probably disagree, because the current value is around about 25% above the long-term historical median, but still 40% below the all-time high. So it will be interesting to see how much further that current value has to go to get closer to 2008 heights. If we focus on sale and purchase, unsurprisingly, we've seen less ships for more money, and we believe this trend will continue in 2024. We have three big winners in 2023, which are all considered, in our opinion, well-timed, executed acquisitions. And, you know, wow, what a difference 1 year can make. For all the non-believers in the oil and gas market, in the offshore market, I mean, just take a look at Tidewater's acquisition of PSVs from Solstad on February the 7th, 2023. You can see the sold value of 577 million and the current value sitting at 833 with a 44% year-on-year change of increase. The same thing for Britol Services, purchases of OSVs from Vroon, 27th of September 23, a total average of around 40% year-on-year increase. And also Hornbeck takeover at Edison Schwest, OSVs, another change of about 39% in annual increase as well. So the future, I mean, I kind of sort of summed it up earlier. You know, it's a simple sort of supply and demand imbalance. Of course, with the recent events that happened over the weekend, you know, we probably will see a further bolstering and continued positivity of the oil price. We see, of course, healthy and growing offshore rig activity. We see less S&P activity but higher prices. It's definitely a seller's market for the owners in the room, and we see new building priority insights as well. So hopefully this presentation will give you a little bit more of a digestible insight and lead nicely into M3's presentation, which is due now. Thank you very much.